If you're going to be receiving a tax refund this year and you're wondering what to do with that money, in this video I'm going to cover 9 ideas on how you can invest that money. Welcome back. This is episode 196. As many of you have been working on your taxes, making sure that you're getting them filed by April 15th, or filing for an extension if you need more time, I figured this episode I'd give you some ideas on what to do if you're going to be receiving a tax refund. I'm going to cover 9 suggestions I have as far as how you can best invest that money to get a good return on your refund. But before we get into that, as a reminder, if you are serious about getting a plan in place for retirement, then consider signing up for my online retirement planning course, Retirement Readiness Review. It's an on-demand course where I educate you on what you need to know about planning the ideal retirement. I cover taxes, Social Security, Medicare, investing, estate planning, and much more. To learn more, head over to www.retirewithryan.com and click on courses. So if you're going to be getting a tax refund, then you definitely should look into why you're getting a refund. I find that some people are always getting refunds and they do like the idea of getting a refund, but it's definitely not the best use of your money as far as you're giving the government a free loan for the entire year. You're not getting paid interest when you receive a refund, whereas if you compare that, if you owe taxes, in some instances you end up having to pay penalties. So the first thing I would do is just investigate if you can do something like increasing your withholding so that you no longer get a refund. And rather than getting it at the end of the year, you're getting it throughout the full year because you'd be getting more in your paycheck. But let's just say that you are going to get a refund this year and you want to know how to best invest the money for this year, not worrying about any changes to your taxes. Well, I'm going to cover 9 suggestions I have for that. So the first suggestion would be to save it for next year's taxes. If you think that you're going to have your taxes going up in 2024, maybe you are self-employed and your income will be going higher, or you're someone whose income fluctuates more from commissions, then it might be a good idea to set that money aside. And you could do that in a number of different ways, through a short-term CD, through money market. Either of these would be good choices. So suggestion number 2 would be to increase your savings. If you don't have an emergency fund, you don't have much of a fund to fall back on, if you had unexpected expenses or you lost your job, it's a good idea to make sure you have anywhere from 3 to 6 months of living expenses in some type of an emergency fund. And as I mentioned earlier, you could keep that in a short-term CD, you could keep that in money market. It really depends on what you're after. If you're looking for money market, you could use an online brokerage account like Charles Schwab, Fidelity, Vanguard. They all offer money market funds that are paying interest rates of anywhere from 4.5% to 5%. Or if you're okay with having the money tied up a little bit more, then consider putting it in a short-term CD, a 1-year CD or less. You could get a very similar interest rate. You also could consider just using a website like bankrate.com to search for high-yield savings accounts and see what other available options are out there for you. Suggestion number 3 is to pay down high-interest debt. If you're carrying credit card debt or student loan debt that's an excess of 10%, you should work on paying off that debt as soon as possible. Now, why 10%? Because it's very hard over time to earn more than 10% on your investments in the stock market on, as an average annual return. There are certainly years where you will make more than 10%. If you were invested in the stock market last year, you most likely earned more than 10%. But over time, if you're paying more than 10% interest, you need to pay that down because even if you have mostly stock investments, you're probably not going to be able to earn that amount of money. So consider starting to pay that down. Consider contributing to a Roth IRA account. We talked about Roth IRAs a few episodes ago, but let's just say you don't have a Roth IRA. You could use your refund to set up a Roth IRA, provided that you qualify. There's adjusted gross income limits. I'm not going to cover them in this episode, but if you do qualify, consider using this tax refund as a way to jumpstart your Roth IRA. What about home improvements? That's another good option for your money. if there's a home improvement project that you've been putting off, this could be a way to get some of the money together, or maybe all of the money, to put that in place. Improving your kitchen or your bathroom is always going to be a good suggestion, because those are improvements that when you go to sell your house down the road, those will usually help to increase the value of your home, and you'll get that money back. Even an outdoor area like creating a patio or adding a deck space, or maybe replacing what you have if what you have is worn out, is also a good investment as far as getting a return on your money, but also getting use out of it. We use our kitchens and bathrooms every day, and as the weather turns warmer, if you don't have a nice outdoor space to use, that could be a good use of your money. Suggestion number 6 is increase the amount that you're contributing into your retirement account. If you still have room to contribute into your 401k plan for 2024, consider increasing what you're putting into your 401k through your payroll contributions, so that you're able to potentially max out that plan or shift this tax refund into that account over time. And so if you are not contributing the maximum, this is an easy thing to do, and that will also help you in 2024 and beyond to probably get less of a refund, so that way your money isn't sitting with the IRS earning little to no interest. Instead, it could be invested where it's going to be earning interest. Also, if you make too much money for a traditional Roth IRA, then you can consider contributing to a Roth 401k if your company offers that. That could be another thing that you could set up. You could have some contributions going into that as well, so that that's not going to help you tax-wise, but it's going to help you to get this money invested and get it working for you. Option number 6, plan a trip. We never know what the future will bring. If you're healthy and you've got the ability to take a trip, and it's been a trip you've been planning or wanting to plan for a long time, a good use of that money, of this money, would be taking a trip. And I find that some clients have a spouse either that's not interested in going on the trip with them, or they're single and they're intimidated about traveling alone. And it's certainly concerned to be traveling alone. So it's always good to go with a friend. But if you can't find a friend, there are a lot of travel groups out there that are designed just for people that are going to be traveling single on a trip. Just Google trips for singles, and you'll find lots of options. Option number 8 is invest in yourself. There's a lot of investments that we can make in ourselves that can improve our marketability in the job market if you're still working. Maybe there's a certain designation in your field, or a certain skill that you can learn and sign up for a course on completing that designation. That's one thing you could do that will pay large dividends to you down the road, especially if it translates into higher income or allows you to transition into a position with another company that can also increase your income. You can do this sometimes through a community college or maybe online. There's lots of different ways that you can invest in yourself. And the final suggestion I'll have is that you can use this money to buy U.S. savings bonds. I've talked about I-bonds in the past, and they were the hottest investment in 2022 because of their interest they pay is tied to inflation in the U.S. as measured by the Consumer Price Index. And the interest rate is based on a fixed rate that's determined when you buy the bond, as well as a variable rate that's measured by the change in the Consumer Price Index every 6 months in May and December. So if you were to buy an I-bond today, your fixed rate would be 1.3%. So you'd always be getting a minimum of 1.3% for the life of the bond. And then you'd be getting a variable rate every 6 months. So currently the variable rate is 1.97% for the next 6 months. So if you were to buy the bond right now, for the next year, the worst you'd receive would be 3.27%, assuming that the next 6 months variable rate is 0. But most likely there will be some type of 6-month variable rate, because it seems like the Consumer Price Index is staying high. So you can currently buy up to $10,000 per individual or tax ID or Social Security number per year. But if you want to invest more than that, you can use IRS Form 8888, And on that, you can request that up to $5,000 of your tax refund be used to purchase I-bonds. So this is a way that if you want to put more than $10,000 into an I-bond, you can use part of your tax refund to do that. So I hope that one of these ideas helps you to make the most of your tax refund. And as always, if you have a listener question, head over to retirewithryan.com and click on Ask a Question to have your question considered for a future episode. Have a great week, and I look forward to talking with you next Wednesday. Take care.